Hi, good morning to our viewers. We have brought the Budget 2025 key highlights. I, Yogesh Verma from Tax Mantra, and Sakar Arun has to deliver the key highlights on this topic today. So, the Budget 2025 is more focused towards the middle class. It is going to churn the Indian economy and has a step forward towards 5 trillion economy. Over to you, Sakar. Let's start.
Thank you for the introduction, Yogeshi. Greetings, everyone. So let's talk about the 2025 budget. So basically, the union budget is a game changer. It has offered much needed relief to the middle class while keeping the economy on a high growth track. So one of the biggest highlights is the revision of income tax slabs, which isn't just a crowd pleaser but a smart move to boost spending and drive economic momentum. This will further help push India closer to its $5 trillion economy goal. For businesses, it's great as well. The budget introduces policies that favors entrepreneurs, startups, and global investors, making India an even hotter spot for business expansion. Simplified tax laws, better dispute resolutions, and incentives for digital businesses add to the appeal of the budget 2025. On broader scale, if we say, the budget has also focused on capital markets, wealth creation, and financial planning, ensuring that a long-term stability and growth stays. With a continued push for global trade, easier compliance, and clearer regulations, India is positioning itself as a top business destination globally. At TMG, we see this as a truly transformative budget, one that strengthens the economy with real structural changes. It supports the middle class while opening up new opportunities in taxation, cross border businesses, financial services, and global trade.
Absolutely, Sakar. Let's see what is there in the direct tax and okay, what is there's four pillars of budget 2025. So the government in this budget has focused on the sectors like agriculture, the exports, the MSME, and the investments also. So agriculture, I believe that certain uh, threshold limit has been extended with regard to the loan to the kisans, the farmers, the KCC credit card, which earlier was at 3 lakhs. It has been enhanced to 5 lakhs. And let's see how exports and MSME are going to has government focused in this sectors.
Sure. Uh, so overall, if we see there is going to be accelerated growth, secure inclusive development, enhanced spending on India's rising middle class. There's going to be higher investment in private sectors and upliftment of household sentiments. So let's see how the budget 2025 will help in all of these directions. So first, let's see direct tax proposal. So first is TDS. So, TDS has been rationalized by reducing the rate and increasing the thresholds on which TDS is currently deducted. They have doubled the limit for tax deduction on interest for senior citizens, that is from 50,000 current to 1 lakh as per the new budget. They have further raised the annual limit for TDS on rent from 2.4 to 6 lakhs, benefiting small taxpayers receiving smaller payments. They have further raised the threshold limit for TDS on professional fees, that is, includes your lawyers, doctors, chartered accountants, and other professional service people, which is
So
from,
if I go through this threshold limit, Sakar, it
yeah,
puts an impression, that all these threshold limits have been upscaled, keeping in mind the cash flow pattern to the middle class. The senior citizens will have a better, cash flow in their hand, where the TDS was deducted at 50,000. Now it's going to be deducted at 1 lakh. So where the TDS used to be deducted, the government used to keep the money with them for a year till the time the income tax return used to find. So a better cash flow in the hands of the middle class for the senior citizens. Likewise for the rental earnings also, that the middle class, if they own a property and they have put it on rent, then instead of TDS being deducted at 2.4 lakhs, now the threshold limit has been upscaled to 6 lakhs. A better cash flow again in their hands, so that they can think about some other avenues of investments. Likewise, for the professional also, wherein the fees used to be at 30,000, now the this threshold has upscaled to 50,000. A better, a better opportunity for the middle class is what I see in the TDS. A
So
better cash
basically,
flow pattern in their hands.
there'll be better cash flow for the taxpayer, as well as he'll have more in his hands to move about, to use for his day-to-day
Absolutely.
operations. Okay.
Absolutely.
So further, let's move
What
to
is in the TCS?
yeah. Similar to decriminalization of TDS payment delays, the same relaxation has also been made applicable for TCS provisions. So, the removal of TCS on remittances for education purposes, given that the remittance is funded through a loan taken from a specified financial transactions institution, sorry, further, they've increased the threshold to collect tax collected at source on remittances which were under the LRS scheme, that is your liberalized
Mhm.
remittance scheme of RBI, which
Mhm.
was currently 7 lakhs, and new as per the new budget, they've increased the threshold to 10 lakhs.
Hmm, 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 hmm. And in this TCS portion, if I recall it right, the TCS on was supposed to be deducted on the value of sales, value of goods. If the sales value of the good used to be at 50 lakhs, so 0.10% was to be deducted. Now the government has also come up with the abolishment of this TCS at the sale value of goods, so there won't be any deduction of TCS from 1st April 2025 onwards. So this is another, move by the government towards the TCS. What's in the house property, Sakar?
So, for the house property, the benefit of claiming the annual value of self-occupied properties as nil will be
Mhm.
extended for two such self-occupied properties, and that is without any condition.
Okay, got it. Okay, let's move forward.
Sure.
Okay, so budget 2025 has brought something in the assessments also. What it is?
So the time limit for updated return, which was currently 2 years, have been increased to 4 years, so that there is more compliance from the side of the assessees. Plus, they'll get more
All right.
time
So
to
this is,
rectify.
I think this is, updated return is basically filed, when an assessee who has missed, reporting his income, and there's an enhancement in his tax liability, then this updated return could be filed. So earlier it was for 2 years. Now they have enhanced for the 4 years, right?
Right.
Okay. What is in the NPS?
So in NPS, a tax exemption will be provided on withdrawals made from the NPS scheme by individuals on or after 29th August 24.
Wow, wow,
Right.
very nice one. Again, yeah, again, I think that these things are a kind of cherry to the middle class SSEs.
So basically, this entire budget is made middleman centric, keeping in mind the middleman.
Ah, 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 ah. The
So
transfer
let
pricing, what it is there?
right. So there's going to be a scheme which will be introduced for determining ALP of international transactions for a block period of 3 years to streamline transfer pricing and to provide an alternative to an yearly examination, which is currently being done. Further, the scope of
Okay.
safe harbor rule will also be widened, which I believe which will be present with all the details in the budget of July itself.
Yeah,
And
safe harbor rule actually, it has the threshold limits at an upscaled level. So I am expecting from the government, that this threshold limit or the arm's length, percentage will be brought a little bit downside so that the SSEs can go for it. Right now it's at the upper scale.
right.
And with regard to this arm's length policy determination, where it was for TPO had the right to determine that arm's length on an yearly basis. So the SSE can opt for where the transfer pricing has been determined for a particular year, 1 year, and they can extend this for the 3 years.
Hmm.
Cool. So tonnage taxation, what's there in the tonnage taxation scheme?
So,
It seems that they have extended it to the inland vessels also.
right.
Good, good, good. So they have given a kind of boost to the shipping industry as well. And what is in the startup, Sakar?
The startup scheme, which was for 5 years, has been extended now for further 5 years to 2030 for companies and LLPs.
I would like to correct on this. I think that this startup scheme was, this is with regard to the incorporation of the company or the LLPs. So the sunset clause was for up till 31st March 2025. So the government has extended this sunset clause to the next 5 years up till 2030. Nice, very good.
Yeah. So let's move
Oh,
on.
this is a hot topic right now. Personal income tax, 12 lakhs tax exemption. What it is, Sakar?
So basically, this is the most talked about and the key highlight of the entire budget. Uh,
Hmm.
so there is a very huge tax relief for middlemen and taxpayers. So there will be no income tax for earnings up to 12 lakh and 12.75 lakhs for salaried individuals.
Hmm.
There is more flexibility. So now you have 4 years instead of 2 year. Sorry, it's about updated return. So as for the new taxes slabs, there is
Hmm.
instead of the 5 lakhs slabs, we have 4 lakhs slab. So every slab
Hmm.
will be 4 lakh rupees. So 0 to 4, there is nil tax. 4 to 8 lakhs,
Hmm.
there's 5% tax, that is rupees 20,000. 8 lakhs to 12 lakhs, that will be 10% tax rate, which is 40,000. So up to 12 lakhs, there will be no tax liability for the taxpayer. And there's a complete rebate under 87A for the same. For 12 to 16
Okay.
lakhs, there will be 15% tax slab, that is your 60,000. 16 to 20 lakhs will be 20% tax, that is 80,000. And 20 to 24 lakhs will be 25% tax rate, which is 1 lakh rupees. And greater than
Again,
lakhs,
again, I see that this, if we compare this proposed tax slab with the one which we have current, I see that again the focus has been centric to the middle class people, right?
right.
Because somewhere at around 20 to 24 lakhs, at the upper scale, the middle class falls in. And this is again, if I see in this 20 to 24 lakhs, it's 25% tax rate, which earlier used to be 30%, where the income used to exceed, I think, 15 lakhs or 20 lakhs. Correct me if I'm wrong.
15
So
lakhs.
that 5%, yes, 15 lakhs. So this 5% benefit again has been given to the middle class. But the hot topic in the town or in the cities with regard to 12.75 lakhs. For the ease of understanding for our viewers, I would say that suppose if you only have a salary income of 12.75 lakhs, so how you can take the benefit of 87A is like this, that from this 12.75 lakhs, you'll first get a standard deduction of 75,000. All right, now the total taxable income falls to 12 lakhs. Now one can take the 87A full benefit of rupees 60,000. So in the 12 lakhs, if I say that the tax payable used to come with this slab 60,000, so an SSE can claim the rebate under section 87A of 60,000. Again, the net tax payable comes to the nil. Right, Sakar?
Right, absolutely
Correct
right.
me if I'm wrong anywhere.
Absolutely right. So,
Okay.
if we look at the last slab, there is
Mm-hmm.
24 lakhs. So, anything greater than 24 lakhs will only be taxable at 30%. Remaining everything will be under the tax brackets as on the screen. So, we can
Mm-hmm.
say to summarize that under 24 lakhs, the total taxable income will be total tax liability would be 3 lakhs. And above
Mm-hmm.
24 lakhs, amount increasing 24 lakhs will be taxed at 30%.
Mhm. Right, absolutely clarity.
So,
Next, Sagar, what we have?
sure. So,
Direct
uh,
tax proposal.
yeah, indirect tax proposal includes your customs basically. So for
Okay,
customs, structure has been changed. So as per the budget 25, the government has uh, the government has stated that they'll remove 7 tariff rates and apply
okay,
not more than one cess or surcharge. Currently, it is more than one, and
okay.
it will apply equal cess to maintain effective duty incidence on most items and lower cess on certain items. So the details will be shared later.
I see simplification as well as benefit to the customer charges, and beneficial in terms of monetary benefit, I would say.
Right. So let's check out the sector-wise proposals given by government in the budget. So first,
Uh-huh.
they have told that Make in India is going to be the topmost priority. So
Mhm.
accordingly, they've given exemption to all open cell for LED, LCD TV, looms and textiles, cattle
Mhm.
for lithium-ion batteries of mobile phones and EVs. So basically, they have
O-
promoted made in India electronics overall. Then there's
Okay.
promotion of MRO, exemption for 10 years on goods for shipping, building, and ships for braking, extension of time
Mhm.
limit for export of railway goods imported for repairs.
I
Then
see.
there is export promotion, duty-free imports for handcrafted and leather sectors. Then there
Hmm.
is facilitation regarding time limit fixed for finalization of provisional assessment, new provision for voluntary declaration of material facts, post clearance and duty payment which with interest but without penalty, and IGCR rules amended to the extended time limit to 1 year and file quarterly statement instead of monthly.
So with these unfolds of provisions, I see that the government is, backing up the manufacturing sector so that there comes employment as well as there comes boost to the economy by giving this make in India options, as well as the government is focusing towards the handicraft as well as the leather sector. It wants these sectors or the industries to grow.
Right. So what will the impact of this be? That made in India products will aim more towards export and create employment in India within India, and it
Yes,
will also
yes.
with the help of electronics with the boom to electronics. This will what will be the impact of this is that there will be duty free exemptions for lithium ion batteries
Hmm.
and minerals to boost green energy, which is also
Absolutely.
the
So it's a
ESG.
boost to the EV sector as well, I see.
Right. EV sector and green and clear energy.
Hmm, 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 hmm.
For indirect proposals to electronics, there is going to be full exemption of basic customs duty on cobalt powder and lithium-ion
Hmm,
battery waste scrap and 12 other such
hmm.
critical minerals, aiming to scale up the EV industry, promote manufacturing in India, and generate employment for our youth. Increasing the BCD on interactive flat panel displays from 10% to 20% and reducing BCD on
This
open
will be
screen at
expensive.
5%.
This will be expensive.
Right.
The
And
interactive flat panel will be expensive.
right. A social
Okay.
welfare surcharge will be exempted on 82 tariff lines, which will further receive a detailed report later.
Okay.
So let's move on to the credit card facility that the budget 2025 has announced. So credit cards for
Hmm.
micro enterprises. What is this? This is basically customized credit cards with a 5 lakh limit for micro enterprises registered on Udyam portal will be given. In the first year,
Hmm.
10 lakh such cards will be issued. There's
So
there
again, it's a welcoming move towards the MSME. It's a
Right.
welcoming move. Okay, very nice.
So there is a scheme for first-time entrepreneurs. For 5 lakh
Hmm.
first-time entrepreneurs, including women, scheduled caste, and scheduled tribes, a new scheme will be launched to provide a term loan of up to 2 CR during the next 5 years.
Wow, wow. It's a step towards, again, I would say, towards the backward, or it's a welcoming, I would say, the move towards the women also,
Right. So this will
the first
impact.
time
This
entrepreneurs.
will help in more investment towards these sectors and create more
Mm-hmm.
revenue generation.
Yes, a welcoming move to the
Right.
first time entrepreneurs. What's in
Uh,
the manufacturing mission with the mandate to focus? What it is?
So, with the help of all these schemes and manufacturing
Mhm.
and good things for our manufacturing business, the impact of this is there'll be ease in cost of doing business, future ready
Mm,
workforce and demand for jobs, a vibrant and
mm,
dynamic MSME sector, availability
mm,
of cutting edge technology in India, quality
mm.
products, and clean tech manufacturing for climate friendly development, which is in furtherance of our ESG goal.
Rightly pointed. What is this? Supporting
Uh,
MSME measures for labor intensive sectors.
So government has, as pointed above as well, government has brought in new schemes and given more expenditure, kept more expenditure in the budget for these areas. So with a
Mhm.
focus on product scheme for footwear and leather sectors, The scheme is
Mhm.
expected to facilitate employment for 22 lakh persons and generate turnover of approx 4 lakh CR and export of over 1.1 lakh CR. For the toy
Mhm.
sector, they have announced to focus on development of clusters, cluster formations, skills, and a manufacturing ecosystem that will create high quality and unique, innovative, and sustainable toys to represent the Made in India brand. Further
Okay.
support for food processing. They'll be establishing a national institute of food technology in Bihar, which will enhance income for farmers and make skilled labor and entrepreneurship and employ the youth.
Makhana board is, what I believe that they are going to establish there in the Bihar region, because it's that this business, it's a huge business, Makhana business, which primarily focus. I mean, it's being done from the Bihar, and they are going to organize this sector. So somewhere, this budget puts an impression wherein the toy sector, the leather sector, and the footwear sector, the government somewhere is trying to compete well in the economy with the China, and they want to uplift these sectors. This is what this budget puts an impression on me.
I believe you are right. Yeah.
Yes, please.
So there is a
Revision class.
revision in classification criteria for MSMEs. So,
Mhm.
investment wise, we can say that the for micro enterprises currently the investment is 1 CR, whereas the revised investment will be 2.5 CR. For small enterprises, it is 10 CR, and for revised, as per revised, it is 25 CR. For medium enterprise, it is 50 CR, and the revised one is 125 CR. What will,
Again, a benefit to them.
so this will generate a revenue which is almost 5 times the amount for each of them.
Mhm. Mhm. So that's all for the, from the budget highlights, I believe. So about the TMG Group is a global leader in tax, legal, and business advisory services with over 40 plus years of legacy, providing comprehensive solution across India, UK, US, Singapore, and UAE. We partner with business and professionals across a wide spectrum, delivering comprehensive financial, legal, and compliance solutions. Our expertise extends across diverse industries and businesses of all sizes, from startups to global enterprises. With a team of over 150 professionals, we offer services that include cross border business structuring and global setup, global tax compliances, business structuring and cross border advisory, virtual CFO and CHRO services, fundraising compliances, and due diligence for hyper growth businesses and startups, income tax, GST, VAT compliances, refunds, and litigation assistance, cross border ESOPs, and contract management, accounting, bookkeeping, back office accounting services for global CPAs, CAs, attorneys, and other accounting firms. Our mission is to empower businesses to thrive by simplifying complexities, enabling informed decision making, and driving sustained growth. So that's all from the Tax Mantra Global on the Union Budget 2025 highlights. I hope our viewers have enjoyed this session, and we made the Budget 2025 simplified and ease. And this session would have brought an ease in understanding it. Thank you, Sakar.
Thank you, Ageshi. Thank you, everyone, for viewing this. Hope you have a good day.